Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Adrian Johnstone, CEO of Practifi, Joe Anthony, President of Gregory FCA, and Kevin Darlington, General Manager and Head of Broadridge Advisor Solutions. They join us to discuss AI and the future of wealth management, certainly a hot topic that we're covering on Trade Talks. It is great to have everyone with us. Welcome to Trade Talks. Let's go around the horn here. And Adrian, I'd like to start with you. Give us a brief intro of where your company sits within the wealth management ecosystem.
Yeah, thanks for having me on, Jill. Practifi is a CRM kind of running the core of large advice firms. So from an AI basis, it's everything from experience to efficiency.
And Joe?
I'm President Gregory FCA. We do marketing and PR and growth consulting for RIAs and wealth managers. We spent a lot of time looking at how these AI tools can help improve efficiency and ideation in the marketing process. And we're excited to contribute here today, Jill.
All right, you got it. And Kevin, finally, Broadridge Advisor Solutions.
Yeah, nice to be here. As a global SaaS fintech, Broadridge really offers scale to financial services globally. We have about 14,000 associates. Just to give you a sense of scale, I mean, we do have about 120 million accounts on our trade processing platform, 15 trillion in assets custodied on our platform. And in our wealth business, which I represent, we're really here to do three things, which is drive advisor productivity, digitize operations, and personalize investor experiences.
Right. And Kevin, as with any vertical, every industry we're talking about, AI is forefront and center. How do you see AI impacting the wealth management space?
Yeah, well, I think it's impacting probably every industry everywhere. And I would say that we have a really nice opportunity because we work with so many firms at both the home office level and at the individual advisor level. And I would say, we probably, like many of our clients, have certainly an optimistic view on one hand, which is to say that we think that AI can bring the industry scale. And one of the ways that might benefit consumers is, for quote unquote, the mass affluent who, largely over time have not had access to full service wealth. AI, we think, can offer firms the scale to really expand their reach and really legitimately start to service the mass affluent who may not need the kind of the breadth of capability that, say, a family office client might need, but actually, AI over time, we think, can give firms the scale to treat clients that well. And I would just say, we've done a tremendous amount of research, primary research, asking firms, C-levels at the home office, how they feel about technology in general and AI as an enabler. I think the other thing that emerges is that with the scale that AI can bring, it will probably also introduce a new wave of price pressure for firms. If you're the firm that's not finding a way to scale and bring your prices down, I would say, I think that it's certainly possible that that race will start to accelerate in terms of the price competition.
Mm-hmm. And Adrian, do you share the same optimism?
Look, always optimistic as a CEO in a technology company. New technology is always exciting. I think the point that Kevin makes around AI as an enabler is a really interesting one. The expansion out into mass affluent, in particular, we see AI very much as being an experience-based enabler. So as we see advisors wanting to reach that scale and the cost efficiency that comes with that, we also see them wanting to dig deeper into personalization. And we think that AI has great potential there. We see it early in the content activity that's happening. But we think that with the data set, as a CRM, that kind of rich core data set constantly expanding just gives us so much more scope to reach out and really start to move those relationships, help advisors with who to talk to, what to talk to them about, and then ultimately how to actually drive that content creation as well.
And Joe, you have interesting perspective here because you are working with clients to help them shape their stories around AI. What are some of the feedback that you're getting there?
When you take a look at the impact of AI and wealth management, a lot of firms are looking at two sides. One, how do I lead with this? How can I come out and talk about AI and making sure my clients see me as innovative on top of the trends, whether it's from an investment standpoint and how I'm running my advisory practice, et cetera. The other side is behind the scenes, the sort of the dirty work, the grunt work advisors have to do in running their practice. I actually think a lot of clients of advisory firms are going to benefit from that behind the scenes stuff they're doing. If it's something that helps onboard a client, where there maybe is a statement reader coming in and using AI and machine learning to figure out what the onboarding client is getting into from their investments, and that process happens faster. Or maybe it's even accelerating the client communications and turnaround on questions they have. I think that's really where the AI is going to be most impactful in the practice management side. We're already seeing that happen. A couple companies out there, I'm not sure if you all know about Your Stake, they have Advisor Core. They're doing something along those lines in terms of helping the onboarding. You saw Catchlight with the lead generation opportunities. They're using AI to flag those leads. And so those are really behind the scenes for the advisors, not really client facing, but in the end, I still think it helps get better financial advice in the hands of clients. And that's what's exciting about AI.
Right. And Adrian, let's talk about integration best practices. It's one thing to acquire an AI tool. It's also something else to execute on it.
Absolutely. And, as we've seen recently, you've also got to be pretty careful about doing what you say you're doing. We've seen a couple of firms attract some pretty hefty fines for, I think the term of AI washing was one, Joe, you mentioned earlier. I think from our perspective, as you integrate these tools, you've got to understand with AI that you need data. It has to feed on something. And so it's not enough to sit on the sidelines and say, I'll wait till it's mature and put it in. You've actually got to have a strategy that looks at the technology it's going to feed from and how you bring that data into there. How are you going to capture that rich information, make sure you've got that source, particularly if you're looking at either efficiency or experience enablement.
Right. Well, Kevin, of course, too, this is a highly regulated industry, of course, anything in financial services is, and there are going to be regulatory and compliance challenges implementing this type of technology and saying, oops, I didn't understand it. You don't have the luxury of just passing off a mistake like that in an industry that's so heavily regulated. So when you think about integrating best practices and executing within that compliance framework, what are some of the challenges that you see there?
Yeah, well, our clients, I think, and we just we surveyed 500 C-level execs about their investments generally, and most of them, as you would expect, are saying they're going to invest heavily in AI, but only about 44% of them say that they've really got they've really got a plan for how to manage risk. And I would say, and sort of echoing the words of our CTO, we talk a lot about shifting left, shifting, the security, the testing, even the legal kind of examinations far towards the beginning of the process when you're looking at any new endeavor. And I'd say that we try to involve stakeholders outside of core engineering, from cyber to legal as early as we can in the process, so that we can sort of look around the corners and anticipate, with or hopefully ahead of our clients where those challenges are going to come, because you don't really, if you're doing that late in the game, it becomes far too expensive and far too risky.
Right. And Joe, how are you advising clients in terms of how they need to manage this? Because that kind of always is the challenge, regardless if it's financial services or other industries, that there's this rush to get to the market, right? Everyone wants to have the first product. They want to be, the axe within this space. They want to have the revenue lines. They want the ARR, but you do have to remain within that regulatory framework. So how are you working with clients to ensure that while still being able to tell their story?
Well, so Jill, obviously we're helping our clients with their PR plans, their marketing, the go-to-market efforts, right? And so a lot of what they're focused on with us is their content, what their stories are telling. It starts internally. They need to make sure that their teams are educated on how these tools work. I think Adrian shared earlier, he was talking about, hey, everyone's a content creator now. There's big risk. Compliance officers have more to do because everyone wants to submit their ideas for review and dissemination, right? And so that's one of the issues. I think so you have to educate internally how they work. For example, depending on how your setup works, for example, ChatGPT, you can actually have an option where your content with your license, it doesn't train the model itself. You want to make sure your information remains private. There's settings for that. There's subscriptions for that. If your team does not know how that works, they could be unwittingly putting client information out there and things like that. So there has to be real education, just like when social media came around, what the rules were for that and so forth. There needs to be real education. That's a starting point. A lot of times firms end up controlling any content or marketing that comes out of AI tools through the same process as before, that even though someone can come up with their own article idea or a bit of content, they still need to run it the same way, the same institutionalized approach as they did before in order to protect themselves and making sure this content goes to the right compliance channels.
Right. And Joe, you brought up an interesting point off camera, because content creation is everything these days, that advisors are leveraging video content to get out to their clients in a different way. And now everyone is doing that, right? And it's kind of an expectation. How do you see advisors differentiating themselves now that AI is the next tool?
Well, it really comes down to a little dirty little secret of marketing communications, only a million years old, which is know your audience. It's really difficult to come out with anything that's going to make a difference in promoting your advisory practice, your wealth management business, if you don't have that audience connection. You have to think about what you're delivering to your clients, to your prospective clients, that's going to make a difference. It's going to make them relate to you. With the AI tools, you can go 70, 80% of the way there with lots of different ideas, whether investment management specific, financial planning specific, but you still need to inject your voice, connect, imagine the clients you're trying to reach. And that's a big part of this tool. And so again, I always look at AI as force multipliers as opposed to taking your job. It's just helping a strong writer do a better job connecting. It helps marketers work faster and be more efficient, but it doesn't take away the importance of that connection. And back to what I said, knowing your audience.
Right. And Adrian, of course, AI, that's the tool that allows you to personalize for clients better than, the industry has had before.
Yeah, I think the industry conversation over the last couple of years has often talked about data. How are we going to capture the data? What are we going to do with it? Do we even know what the use of this data is? And I think AI starts to delve into that. It starts to say, well, if you've put in the effort to genuinely know your audience, to understand them more beyond what their invested dollars are, to understand them, at a personal and at a human level, then you can start to use these tools. You can really start to lean into them. If you're running technology today that is frankly not doing that, it's geared at just ticking over a very simple relationship, that's going to be hard. You're not going to have that data, and so you finish up in more generalized models. Just as we see in education today, where people are starting to be able, examiners are starting to be able to look at college students' work and single out that this was not written by the student, it was written by the AI. Consumers are already becoming used to that. They're already looking and going, this is trying to sound like it knows me, but it doesn't. And so it's very important that with personalization being such a core part of the industry, that advisors don't fall into the trap of over-relying on these tools, particularly if they haven't put in the effort to feed the data in at the bottom end.
Mm-hmm. And Kevin, organic growth continues to be a challenge within the RIA and wealth management landscape. How do you see AI perhaps triggering some organic growth?
Yeah, I mean, I think with respect to the kind of classic marketing funnel, we talked about it a minute ago, but when you're prospecting for new clients, and then when you're converting those prospects to clients and you're nurturing them, I think just consumer expectations for not hitting the mark of sort of getting them, those expectations are continuing to go up. And so I think that as you think about the top of the funnel, where you can bring prospects to the table in terms of your digital footprint, your website, social media, et cetera. There's a lot of signals you can gather about the prospects. Where do they come from? What did they raise their hand about? When you start to engage them through kind of content marketing and personalized nurturing, they're continuing to give more and more signals about what are the things that are most interesting to them and what are the things that are not interesting to them by virtue of what they engage in. That footprint and that profile that advisors or firms build really, I think, needs to be employed to make sure that every successive interaction is more and more and more personalized. And if you're the advisor who's not personalizing and you're not pulling that prospect and that client closer in, demonstrating that topically what they need to know about, I just think that the tolerance for that kind of irrelevance is going to go down. And so we look at this as, it's a combination of good data, use of AI, but also good, reliable content. So I don't subscribe to the notion that advisors should be just running around creating content with AI. But firms of all different sizes already have a base of content, both firm produced content and content they procure from other sources. If they can put that in the hands of the advisors and allow the advisors to connect the right content to the right individual at the right time with AI and make sure that that content is reliable, it's fact-checked, it's regulatory reviewed. That's a pretty powerful recipe, but I think, you sort of have less and less a choice to not go that route as things advance here.
Right. And Adrian, as we're in the last 5 minutes here, I want to think about the outlook for the industry. And it's kind of ironic in a way that there's this concern AI is going to replace everyone's jobs. But for the advisor space, it seems as if it's going to free up time for the advisors to do more than ever and focus on their clients and have a more empathetic role in their financial planning.
I couldn't agree more. I think in terms of an outlook, I think AI delivers advisors the sort of thing they've been looking for. It gives them that ability to go away and personalize and to really spend the time, invest the time on their individual clients, and ultimately, as we've talked about, for them to be able to serve more clients. The more we move the noise out and the friction out of the process, the more time they have to serve. Just touching on Kevin's point just a moment ago, one of the other great areas for organic growth for advisors is of course referrals. And the more that they can personalize, the more they deliver a great experience to their clients, the more they're going to get referral business. And so understanding who are those centers of influence, where can I lean on within my existing ecosystem and really nail the experience for those individuals is going to give them so much more power as they look to organic growth to fuel the future.
Right. And Joe, if we can get your outlook here as well.
Well, I actually believe that AI could help address the human capital shortage in the advice business in this way. A lot of practices and advisory firms are set up where that part of the work is done by power planners and administrators who are doing a lot of the client onboarding, a lot of behind the scenes work in terms of preparing statements and things like that. With technology, and particularly AI tools that are coming about even today to help accelerate some of those tasks and make them more efficient, those power planners will have more room to grow up industry and focus on actual client interaction. There's no need to keep a huge team of those people in place doing those lower level tasks. They'll be either augmented or supplemented or just frankly done by AI. And those people have a path to grow up in the business, where right now, because of circumstances, some of these tasks still require a lot of time, and these people are left doing those tasks instead of moving further up the value chain with customers. So I actually think it's a big positive, and I'm one of those people in those roles right now where I'm thinking about how do I relinquish these roles and move up and do more client-facing work. Some of these tools will help them do that.
Yeah, and Kevin, that's a great point that Joe makes. Perhaps some people don't want to go into the advisory business because they don't want to have to deal with those tasks that require so much time and doesn't allow for career growth, right? So, and this technology will enable it. When you think about that, the industry has been relatively stagnant in terms of growth, getting people to become advisors. I mean, this could be a game changer in that respect.
Absolutely. I was at an industry event a few weeks ago, and there was a conversation about why are there not more new entrants into the space, to your point. And an advisor raised his hand and he said, it's because it's too hard. There's too many things that compete for your time. So I think if the industry could really legitimately get the scale to bring new entrants in, and allow really every advisor to spend more time doing what they really probably got into the business to begin with, which is to spend more time with clients. I think that's a win. I think one thing I'll just say, on that point is we have a practice that's doing a really good job both recruiting young advisors and bringing on young clients. And that's because they're allowing those young advisors to spend an hour of time, with a young client who might not be ready for full service wealth, give them a sort of bite-sized chunk of value, and then, sort of get to know the firm. And then as they graduate, their needs get more sophisticated, become a full service wealth client over years. I think that kind of scale is necessary for a long-term sustainable pipeline.
All right. And we'll leave it on a positive note, gentlemen. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.